Right. Well, I want to thank everybody for attending our FY23 Ad Hoc Audit Committee member. And before we start, I would like to just introduce everybody on this committee. First, we have Fred Burnett from the City of Norwalk, Common Council Chair of the Financing Claims Committee. We have Sherry McCready Trichet from our Norwalk Public School Board Chair. We have Ed Abrams from Board of Estimate and Taxation. And we have Nate Jordan, who is our public citizen representative. In addition, we have our special guest, Mr. David Flint, who is the principal from Clifton Larson Allen, CLA. We also have on here from our finance department, Board of Ed and City, Luda Asmani. He is the Norwalk Public School CFO. And we have myself, it's May Lamb from City of Norwalk Comptroller's Office. And also sitting beside me is Karen Vitale. She's my W Comptroller. We also have Tom Livingston, who is our chief of staff. I'm sorry, Tom. And we have Tom Ellis, our budget director. Hopefully, I have everybody who's listed on the panelists. If I missed anybody, I apologize. So, welcome. As I mentioned earlier, this is the FY23 Audit Committee. We have our auditor, David, here to kind of pinpoint the highlights of our fiscal 23 financial audit. So with that, I will just go through the agenda as we already called to order and have our roll call. David, I will turn this meeting to you.
Thank you. Appreciate it, Chitsumay. Appreciate the opportunity to talk with you guys this afternoon, and I appreciate the opportunity to work with the city. Chitsumay, do you have my PowerPoint?
Did you want me to share or can you share it?
Great question.
Let me know.
I don't know if I know how to do that.
Okay. We could do it on our end.
That would be great. I appreciate that.
Spoken like a true auditor accountant. Don't know if I know how to do that.
We use Teams, and I'm not as familiar with Zoom, and I do not see a share option on my screen.
Okay, the share should be on the bottom.
Is it? Well.
Okay, that's okay. We'll get that. I did send it out to the committee members earlier this morning.
Excellent. Thank you, Chitsumay. All right, if you could just flip forward to the agenda screen, that would be great. Yeah, I'm not going to read that to you guys. All right. Quick agenda. Do the terms of engagement, you know, what you hired us to do. Executive summary, which is basically the results. Some financial highlights from the financial statements. I'll cover the federal and state single audit. I'll go over the management letter, And then I'll go over the governance communication. It's basically just some stuff that we are required to communicate to you in this meeting. So next slide, please, Chitsme. One more, please. So the terms of the engagement. So we express 5 opinions, really. The first one is the one that you'll find in your ACFR, your annual comprehensive financial report, more commonly referred to as your financial statements. So we express an opinion on whether the basic financial statements are presented in accordance with GAAP. The remaining items will be found within the federal and state single audit reports. We express an in relation to opinion on the schedule of expenditures of federal awards and the schedule of expenditures of state financial assistance. We also express an opinion on compliance related to major federal and state award programs. We provide a report on internal control over financial reporting in compliance with laws, regulations, contracts, and grants. And finally, provide a report on internal control over compliance related to major federal and state award programs. One more, please, Chitsme. All right, so the results. So for the financial statements, we provided an unmodified opinion on the financial statements, and there were no findings reported on internal control over compliance. So basically, an unmodified opinion is the best opinion that can be given. For the federal single audit, we also had an unmodified opinion on the major federal programs. However, we did have a finding that came about during the federal single audit, and it was a significant deficiency in internal control over compliance. I'll talk about that a little bit more when I go through the federal single audit. For the state single audit, also unmodified opinion on the major state programs, and there are no compliance findings, no significant deficiencies, anything like that. All right, so here are your government-wide financial statements. These are the first financial statements that you'll see within your ACFR. These are prepared on the full accrual basis of accounting. And the biggest difference between that and the rest of the financials is that this includes capital assets. The city has $814.5 million in capital assets. It also includes your long-term debt, which the city has $598.2 million. That brings you down to a total net position of $452.7 million, of which 476 is a net investment in capital assets, which is basically your capital assets less any debt outstanding used to acquire those capital assets. Because this is prepared on the full accrual basis of accounting and includes long-term debt, some items like your net pension liability, which are very big numbers, I don't think this is probably the most valuable financial statement for you guys to look at. So on the next slide, Chitsme, is your fund financial statements. And this is where I would ask you guys to spend most of your time. So looking at the general fund first, the general fund had a $5.5 million surplus for the year, bringing ending fund balance to $89 million. Capital projects fund had a $6.8 million surplus, bringing fund balance to $39.6 million. This is primarily caused by a large bond issuance that has not yet all been spent yet. The ARPA fund, we recognize that revenue as we spend it. So really the only fund balance within that fund is the investment income that we've received so far from the invested ARPA funds. The Board of Education Grants Fund had a deficit of $4.2 million for a total of $10.9 million in negative fund balance. But this is not to be alarming. This is just a timing issue. Under the modified accrual basis of accounting, receivables have to be received within 60 days after year end for them to be recognized as revenue. So there was actually $13.5 million of receivables within this fund that were not received within 60 days. So they're not going to be recognized as revenue until next year. And then finally, you have your non-major funds, your aggregate remaining funds are sometimes called. And basically, that's all the rest of the small funds within the city consolidated together. They had a small deficit of $106,000 for the year. If you wanted to see what makes up all these small non-major funds, I would refer you to exhibits B1 and B2 in your financial statements. So honing back in on the general fund again a little bit, The general fund had ending fund balance, as I said, of $89 million. $10.2 million of this is assigned. So 4.2 million of that 10.2 is actually encumbrances that were carried over to 2024. So basically, this is money set aside for amounts that will be spent in 2024. There's also $6 million that was used out of that fund balance to balance the 2024 budget. The remaining portion is unassigned. It's $78.8 million, and this represents roughly 18.8% of the general fund budget. This is a very strong number when it comes to unassigned fund balance. Typically anything around the 10% range we say is good, although I have heard rumblings that bond rating agencies are starting to look for in the 15% range for the highest rating. So again, 18.8% is a very strong number. Okay, so now we're looking at the city's proprietary funds, more commonly referred to as enterprise funds. You have the Water Pollution Control Fund and the Parking Authority Fund. These are segregated. These are funds that are run more like a traditional business. And again, these are recorded on the full accrual basis of accounting. The Water Pollution Control Fund had a positive change in net position of $2.7 million, increasing total net position to $114.7 million, which is very strong. Again, the Parking Authority also positive change in net position, $819,000, total net position of $20.6 million. Again, in a very strong position. Also included on this page, you'll see all the way to the right is your internal service funds, which makes up the health insurance fund. This had an increase in net position of $2 million for a total net position of $11.4 million. For someone like myself who sees health insurance funds across the state, this is actually a very good result. A, to have a surplus for the year, and B, to have positive net position. Rising healthcare costs over the last couple of years, plus an influx of doctor's visits post-pandemic. These funds have actually taken huge hits, and many of them are actually operating in a deficit now. So this is great to see. This slide just looks at the pension and OPEB funds. Both experienced significant gains in 2023 as a result of good market conditions. And if you flip to the next slide, Chitsime, I'll go over a little bit more specifically about those funds. These are just kind of like some financial highlights that I think that you guys should be aware of. So property tax collections were 98.4% compared to 98.8% in the prior year. Consistent year over year, just a small decrease there. Back on those pension plans, if you wanted to look at RSI 3, which starts on page 109, there's four pension plans. The employees plan had a $64.8 million net pension liability, and that fund was 76.83% funded. And that plan actually saw a slight increase in its funding ratio year over year. The fire plan, $38.9 million liability, 74.92% funded. That funding ratio actually decreased year over year. Would you mind just going back for me? One more, Chitsime. Thanks. The police plan, $55.5 million pension liability, 71.8% funded. That funding ratio decreased as well. In the food service plan, your smallest plan, $1.6 million liability, 69.26% funded. That funding ratio decreased as well. So typically, we like to see a funding ratio of around 80% or more. Some of your plans are close to that, but they have dropped below that level. What's interesting is that we did have very strong results in the market for fiscal year 2023, and we still saw a decrease in the funding ratio of 3 of the 4 plans. And that's because the city decreased your discount rate from 6.75% to 6.625%. And basically, this is the expected rate of return, the long-term expected rate of return that we estimate that the plan will be able to receive from its investments. This is a statewide initiative, and everybody has been decreasing their discount rate. The rates were up in the 7s. Actuaries realized that was a little bit too ambitious, and we've been scaling that number back. Oftentimes just 1/10 of a percentage point a year. And you'd be surprised that just that 1/10 of a percentage point, how big of an impact it has on increasing the pension liabilities. So that decrease right there is why the liabilities increased, the funding ratios decreased, even though we had a great year in the market.
Is there a target for that decrease? I mean, how low are they going to go? You can go real low, and then it's like, increases the liability astronomically. So
no, that's a great question.
It's a question for
your actuary. It won't be below 6s. I'm confident of that. But where they have settled on for the city of Norwalk, I'm not sure.
I can, David, I can say our guidance for fiscal 25 is up a fair amount over 24. So in the absence of anything else moving, I would expect those percentage funded numbers to increase during 2025.
That's excellent.
Our discount rate, the plan was to get to 6.5%.
Okay.
You said 6.5?
6.5%. So that would be our fiscal year 24.
Okay.
Okay, so we will have a small decrease again. We'll have a similar type decrease for fiscal year 24.
Yeah, and then we'll stay at that level, similar to our the OPEB, which is at the 6.5%.
Okay, great. So if you RSI 4, page 113, it shows how much the actuary determined that you need to put into these plans, and you'll see that the city put in 100% of that determined amount for each of the plans. So although the plans might look like they're slightly underfunded, you are putting 100% back into the plan that the actuary has determined to get you back to increase those funding levels.
David, can I just interject there for a quick second?
Absolutely.
As we were going through the 2025 budget process, it was very challenging for a number of reasons. And we had started to look at perhaps taking a little bit out of what the actuaries had said. Let's say they, put in 100, and we were thinking, okay, what if we put in 90? Had we done, and I was told, no go, don't, that's untouchable. So we didn't end up changing anything that the actuaries had suggested. But had we done that, this is where we would see that noted, right? You guys would do your field work next year and say, they told you to put in 100, you didn't, and now we're going to make a mention of that.
Correct. So that RSI 4 schedule, there's 4 pages, one for each plan. It'll show that you had a deficiency in each plan. Yes.
No, I won't even consider that idea in the years coming.
I think that's the right call. All right, and then RSI 5, that shows you the investment rate of return that the plans did get. The 4 plans averaged about 9.2% for the year. That's up obviously from an 11.3% loss in the prior year. Next slide. There you go. So this slide, same type of information, but for the city's OPEB plan. It starts on RSI 7, which is page 119. So the city plan actually had a $5.4 million OPEB asset. It's an asset because the plan is 104.36% funded. So we talked about in the 70s for the pensions. This plan is actually 100% funded. This is particularly impressive to me. The plan is not a small plan at all. And a lot of municipalities around the state have eliminated their trust altogether. They have no money set aside for their OPEB plans, or they have significantly underfunded plans because most of the attention has gone to their pensions. And they're paying those OPEB liabilities as they go yearly without any funds in a trust to cover those costs. So very impressive to say that your OPEB plan is 104% funded. Part of the reason why, if you see on page RSI 8, the city actually made a contribution into this plan that was $2.1 million more than what your actuary said that you needed to put in. And then finally on RSI 9, which would be page 121, the investment rate of return for the OPEB plan was 11% compared to a 13.9% loss in the prior year.
David, question on that, through you to Tom. Was that 2.1, was that intentional, or that we put in more than was determined that we needed to put in?
So the 2.1 is actually, on the city side, the city contribute 100% of the required actuary return the amount. The 2.1 is actually from the Board of Ed side. So, the city, put in 100%, and then the Board of Ed have the additional. What we've done in the past is we've always requested the Board of Ed for their reimbursement of any OPEB expenses related to Norwalk Public School and other post-employment benefits. So that's more of an internal discussion to see if, you know, maybe the 100% of the actually determined could be a portion of that. We'll talk to our actuary to break out the different departments within what makes up the total ADAC amount for the fiscal year 24 and 25, and then we could talk internally with our Norwalk Public School and also our city finance department.
Okay, thank you.
All right, so moving along to the state and federal single audits. If you go to the next slide, Chisme, we're going to look at the federal single audit first. So fiscal year 23, the city expended $52.2 million in total federal awards. The programs or the grants that we audited this year were the American Rescue Plan Act, also more commonly referred to as ARPA, Education Stabilization Fund, commonly referred to as ESSER, Highway Planning and Construction, and the Special Supplemental Nutrition Program for Women, Infants, and Children, more commonly referred to as WIC. You know, the federal government gives us guidelines, a formula, if you will, that tells us which programs we need to audit each year. So generally, this is a rotating schedule. But big picture, every one of these large grants has to be tested at least once every 3 years. So we had an unmodified opinion on major program compliance. As I noted earlier, we did have one instance of non-compliance, which was considered to be a significant deficiency in internal control over compliance. It has to do with the city's procurement policy. Probably 6-ish years ago, Uniform Guidance, which is the framework for grants management, they implemented a certain criteria that has to go into everyone's procurement policy when they are procuring items using federal funds. The city's procurement policy was never updated for this new guidance, which is why we've had this finding for the past, I think, 4 years now, for as long as we've been your auditors. I guess just a little update as of today. I did receive a draft version of an updated procurement policy for the city. I did give it my blessing. I just need to see that implemented formally before the end of the year so we can get rid of that for fiscal year 24. I don't know if Chitsme, you know if there's been any movement on that.
We are in discussion with our purchasing department. I'm hoping that we will be implementing that shortly, so that way when you come in the summer and we tell you, here's a policy, it's been updated on our website and we are enforcing it, that it will be addressed and then it won't be a repeat for this year.
Does it have to go to council approval, or what are the obstacles from getting this implemented?
Yeah, that's where we have to you know, we're still have to discuss with our purchasing department and we'll have to get the opinion from our corporate counsel's office to see if this has to go to an approval of the different committee or board. So, but we're very confident that we will, you know, get that document to be implemented, you know, within fiscal year 24.
That would be great. All right, next slide, the state single audit. So for state grants, the city expended $43.9 million in total. On the programs that we audited in 2023 were the Alliance District, Priority School Districts, Early Care and Education, and the Tiered Pilot Program. So heavy on the Board of Ed side. We had an unmodified opinion on program compliance, and we did not have any internal control findings. So there were no issues with the state single audit. So in addition to that federal single audit finding, we did provide a management letter. These aren't major issues. They are items that we would like to see improved upon going forward. This is just a letter from us to management, just describing those. So I guess high level, I'll go through them. First and foremost, we've asked the city to develop a comprehensive accounting policies and procedures manual. We're pushing this really hard on all our clients. As I'm sure you've heard, turnover in municipal accounting offices has been really high. Filling vacant positions has been really, really hard. So, you know, we believe that a documented manual of all these policies and procedures would make filling those positions, getting people up to speed, filling in for people when they're absent, it would just make that process a lot easier and a lot smoother. So this has been a recommendation for the past few years. Another recommendation that we have relates to IT recommendations. So when we first came on as your auditor 4 years ago, we had our information technology team come in and they did an assessment of the IT control environment. And they did make some recommendations out of that. You know, this is outside of the scope of what I do. They're specialists in that area. They did make some recommendations, and you know, some of those are still outstanding. So I just ask that the finance team work with IT to address those. We also recommending that the city perform a formal fraud risk assessment. Greg, I think we talked about this on our phone call, but basically I would just love to see management, department heads sit down and really just brainstorm how could people steal from the city? How could people commit fraud? You know, they know the city better than anyone, and they usually have a good sense of how that could occur. You brainstorm, you document all the ways that people could, and then you identify, do we have controls? Do we have policies? Do we have procedures in place to make sure that that can't happen? And if you don't, you work to implement them. We recommend that this happen on a yearly basis. We recommend that it's documented formally. So that's just something that we recommend and we'd like to see going forward. And I think it's kind of a good thing that this group could oversee. And then finally, you know, we would like to see that city implement a fraud tip line. This is something that we recommend to everyone, basically just an anonymous outlet for employees, for citizens, to whistleblow, if you will, if they know of any fraud, if they suspect of any fraud, anything like that. You know, this could be done via the website, it could be done via phone service, anything like that.
A quick question. Quick question, comment. Chitsime, you might know, have we assigned an owner of each of these 4 items to kind of oversee the next steps in trying to address 4 areas?
I think we had a discussion because, you know, we used to do monthly meeting with our own finance team, and we would discuss about, you know, any audit issue and the audit assessment, and this did come up, so we are currently working on this, just, as, you know, every year, we're always looking to make sure that we have the right accounting policy manual. I think we were putting it in piecemeal. So we have that. It's just more of consolidating all these issues that needs to be addressed. So we are, I guess, talking about it, but I mean, like Dave mentioned, you know, just making sure that we have to make sure things are documented and, you know, maybe implement a team. So we're almost at that stage, but not quite yet. We've just been talking internally with our own finance department.
And, you know,
So let me follow that up by saying, is the plan to assign an owner to each of these four items, that person would be the point person to try to implement these suggestions?
Well, we could definitely do the first two because that's under the finance department. I think with the fraud risk assessment and the fraud tip line, we'll definitely bring that up to the mayor or the chief of staff's department to help us implement the next step.
Yeah, I mean, I think that what Greg's saying is somebody needs to take ownership and
Yeah.
either make it happen or explain why it's not happening, other than talking about it.
Exactly. Yeah, exactly. There's one thing about in the meeting, but you know, to really give it some, we need to assign it to an individual who would be responsible to identify, okay, what be done to make this happen. If we're going to put a fraud tip line in, you know, somebody needs to own that and say, okay, these are the steps we need to take, implement this. This is the help we need, and basically be accountable for it. You know, I hate to the response being a committee, because it's not going to happen in my mind. It's got to be assigned to someone to own it.
Greg, this is Tom. I just sent Chitsame a note, set up a meeting to go over these items on in the letters to figure out how to handle them. I agree with you. We need to have somebody responsible. So we'll go over them and you can join us if you want, or we'll just report back.
Yes, I appreciate that. If you can include me, that would be great. Thank you.
And the thing is, you know, you have to understand, like, that fraud risk assessment can be like a monster project. So part of it is, you know, getting somebody owning it and then figuring out how to approach it, because I've seen it being done in other places, you know, and it's like somebody owns it, and then each department, they say, here's, you got to do this, and then you got to report back to the person that owns it. And it's a department by department thing, because it can be a huge undertaking.
it could, and a good place to start might be, you know, one department at a time, to your
Right.
point, Nate.
You know,
All
I don't know, Greg, I don't know if as this committee, we should say, you know, 6 months from now, we should meet again and find out who's owning it and what's happening with it, you know? Instead of waiting until next year and saying, oh, you know, well, guess what? They're here, they are again, and nobody did anything about it.
Well,
I would support that. Yep.
you know, with transition in the you know, finance director role, you know, that this might be a good opportunity to implement some of these items. I don't know how
Maybe, you know, yeah, maybe maybe we can say, let's just schedule, you know, an audit committee meeting 6 months from now to find out where we are on these things, or, you know, something that works. Obviously, I don't want to say, let's schedule it when you're getting buried by next year's audit or whatever, but I think we should have a time and say, let's meet before the next audit meeting and just review if we're making progress here or not.
Any other comments on that? I'm happy to talk with anybody offline further on those if anyone would like. So as I mentioned, you know, we do have some required communications. You guys should have all received our final governance letter, you know, to those charged with governance. If you haven't, Chisholm should have a copy, but basically high level. We did implement a new accounting standard in 2023, GASB statement number 96, which has to do with subscription-based information technology arrangements, commonly referred to as SBITAs. You may have remembered last year we implemented a lease standard. This is a piggyback off of that standard. Instead of leases, it focuses on software subscriptions. So if the city is contracted for a software subscription greater than 1 year, we are now getting that liability on the books because it represents future cash outflows that the city is committed to.
Can I ask about that? Because I was looking
Sure.
around and I made some notes and I can't find them, but now I'm remembering looking at this and like you've got this in like the report letter and other stuff, and the numbers seem like just beyond insignificant in connection with the size of our financial statements. Like you've got an emphasis of matter in the report letter, and it's barely, a pimple on an elephant's ass, pardon my language, in the amount of money you're talking about.
You're not wrong. When you talk about $100 million pension liabilities and bonds payable, yeah, it's insignificant in the overall scheme of things. We do have specific materiality thresholds that we follow. Unfortunately, that number is over that threshold. Otherwise, we could have ignored it altogether. But I agree, it's not. It's certainly not something on your overall long-term debt that is a big issue.
Yeah, it just seems a little trivial, but
I agree. When we implement a new standard that actually does get into statements, this is kind of the path we follow. So the financial statements do contain some significant estimates that we want to make you aware, because they are estimates. Capital assets obviously have useful lives. Those are estimated. The net pension liability and your OPEB liability, you actually have an OPEB asset, as we talked about. Those obviously are estimates. And then the claims incurred but not reported in your health insurance fund, that's of course an estimate. We did not have any disagreements with management. Management did not consult with any other accountants. We did not encounter any significant difficulties in performing the audit. There were no uncorrected misstatements, no adjusting journal entries, and we did not have any independence issues. That's my contact information. Again, we certainly don't need to talk once a year when I do this presentation. If you ever have any comments, questions, concerns, areas you just want to look into further, always feel free to reach out to me. Any other items you guys want to discuss while I'm here?
Can I just point out something?
Sure.
So I think that this clean audit is significant to note that obviously it includes the Board of Education. And given the Board of Education secures, manages, and reports on many different grants, and we have this clean audit, it certainly would demonstrate that the city and the Board of Education finance teams have done their jobs correctly.
Agree. The audit report certainly shows that.
David, can I ask you to go somewhat on the heels of what Sherry just said? It obviously didn't sound like anything was wrong. I just didn't get it all at once. Could you touch again on that education grant where it was a negative balance because of the timing issue? And the reason I mention that is, again, for another reason, I had extensive conversations with our bond advisor who points us in the right direction to maintain our AAA rating.
Sure.
And that was an issue that he raised, was the negative balance in the education grant fund. But
Sure.
hearing you say it, it doesn't sound like it's a big deal. So could you
Not at all.
walk me through one more time?
Yeah, not at all. So those fund financial statements are recorded on the modified accrual basis of accounting. In short, receivables aren't recorded as revenue unless they are collected within 60 days after year end.
Okay.
So what's that? By the end of August, if they're not collected by the end of August, you're not allowed to take them into revenue. So there was actually $13.5 million of receivables, money that we know the city's gonna get. It's owed to the city. But we just weren't able to take it into revenue because it wasn't received in what governmental accounting standards considers to be timely.
Okay, so if we're
So
waiting.
as soon as that money's received, that deficit gets washed out.
Okay, so an example would be we're waiting for a $2 million grant from the state of Connecticut. They're dragging their feet. It arrives on day 61, doesn't count.
Exactly.
Right.
Exactly.
Yeah,
Even
I guess
though,
that the question in my mind is, the fact that it was outside the 60-day window, is that because the state was dragging their feet because we didn't ask for the money soon enough? I mean, do you know that? Was it something where we spent the money and we're waiting for them to pay us back?
generally, yes, because it's a receivable, right? So
Right.
you spent it, and it's owed to you. So generally, yes, it's spent. I can't specifically speak on the timeliness of when you're asking for the money right now. But yes, those are the two reasons why the receivables could come in late. They're not being drawn down on a timely basis. And the state honestly is slow to pay. And that's just coming from general experience. They are slow to pay.
I think there are a lot of people on this call that would agree with you on that one.
Yeah.
And also too, I would guess, and certainly Linda probably would know better than me, but also grants have different calendars, right? Not all grants are on a, on a calendar like the city is. So that might impact when you receive the money. Not all of them follow a July calendar, right? Some of them actually follow the actual calendar year, so that probably would impact it as well. That would
Yeah.
be my guess. In my
Yes.
past working, grants, that's always been an issue.
So yeah, so if you look at if you look at the balance sheet for that, you'll see something called the deferred inflow. There's $13.5 million of deferred inflows in that fund. That's kind of your check, right? That's telling you that there's $13.5 million of revenue that is just waiting to be recognized and when it's received. So Tom, that's kind of what I would point them to.
Yeah.
That deferred inflow. It's kind of silly, but
Well, good.
that's the standard.
You saved me a few phone calls and emails with that. Thank you.
Yeah, if you need me to talk to somebody, let me know.
I don't think so. I think I can articulate it now,
All right,
but I will let you know if he needs more.
absolutely.
One other question, and I know the timing and there's crunch and all that stuff, but it seems to me, shouldn't we be meeting like before the report gets issued? Not 3 months afterwards, or maybe even around the time it gets issued? I mean,
What?
and
Can you
maybe
elaborate?
it just can't happen, but we used to meet years ago, we used to meet in like December when the report was coming out, as opposed to 3 months later.
I could accommodate you guys. We're issuing it in the last. We're issuing.
Yeah, I know, it's
usually.
like going out in December, like it's gotta
Yeah,
be issued by the end of December, right? And I'm
Yeah,
sure
yeah.
you're under crunch time and all that, but
Yeah, so if you guys wanted to meet first couple weeks of January, I'd be happy to do it.
something to consider anyway.
No, listen, I've been doing these presentations for the last 6 weeks, so
Yeah.
if you guys want to get bumped, I mean, you guys tell me generally when I do it, so I'm happy to do it whenever you guys are happy. Typically not usually. We typically never do them before it's issued.
Okay.
I had a small question on the fund balance. What you showed, David, was end of fiscal year 2023, 78 million, which I believe is correct, but I think you were showing 18.1%. And we just received a presentation that showed the 78 million, but 19.7%. Why the difference?
I don't know how it was calculated. Basically, the way I calculate it is I use that unassigned number in your financial statements, and I use the total general fund budget from the RSI2 schedule. So if you could get me that calculation, I could see how they differ.
I guess I'll pass the question over to Tom Ellis. In your recent presentation, you were showing 19.7%. So are we looking at something different?
You know, we may have been going against the, no, that would be a smaller number. You're talking the percentage. We're on.
Yeah, I'm not talking about the I think the dollar amount, we're right on with that, but I'm talking about the percentage.
Which was that last week's presentation or last night? I don't remember doing it.
Last week, the one that the initial mayor's presentation. Yeah, you showed end of fiscal year rainy day fund as a percentage of total general fund expenditures, 19.7%. The dollar amount's the same, 78.8, but the
Yeah,
percentage is
yeah.
19.7. So I'm just curious as to, are we
It-
looking at the
If I
same
had
thing?
if I had to guess, Greg, I would say that the 19.7 is the percentage of actual expenditures. The number I gave you is the percentage of the total budget. And of course, you were $18 million below budget. So that could be the difference between the two calculations. Does that
I'll
make
check it
sense?
out. I'll check it out, Greg, and let you know.
Great, thank you.
Regardless, that's a very strong number.
David, do you know, Henry used to say that we had the biggest rainy day fund in the state. Is that still the case, or any
It's the
idea?
biggest. It's the biggest one that I see.
Yeah,
I don't know them off the top of my head. It's strong. Off the top of my head, town of Wallingford's over 15%, but there's not too many that are over 15%. You guys are all the way up 18, 19%. It's good. You know, you used $4 million last year to balance your budget. You increased that to $6 million this year, which is great.
and our current proposal is to go a bit higher than that. But again, that was a part of the extensive conversations with the bond advisor and how that would impact the AAA rating. He was comfortable with the 8, but don't make it a habit was sort of his guidance.
Really?
Yeah.
Even with okay.
I think he tends to err on the cautious side. Collectively, we're fine. It's not just that number the rating agencies look at, but he tries to encourage us to make sure that we're at or above all the key thresholds that they look at.
Yeah, well, you used $4 million in 2023, but you still had a $5 million surplus. So, if that trend continues, he's not going to have a problem. I promise that.
Now, and this year we have a rather unique explanation for the usage of the drawdown that we don't expect to be repeated next year. So that's in my eyes, a bit of an anomaly this year.
Okay. Anything else, guys? Well, I appreciate the time. Again, feel free to reach out to me whenever. Doesn't just have to be for this meeting.
I would like to thank everybody for attending this meeting. We will circulate David's contact information if anybody would like to have a discussion or additional question. Feel free to also email me and I will forward it to David to see if they get a response that way. If you have any other questions, please let us know. If not, I will, I guess we could adjourn this meeting. Oh, I'm sorry. Do I have to ask for a motion to adjourn? Anybody second? Thank you so much, and hope everybody have a wonderful weekend.
You too. Thank you, guys.
Thank
Again,
you.
very much.
Take care, everybody. Thank you.